Okay, welcome back everybody to today's Market Explained, FourStar Media Experience. I'm Brian Castle, your host, and with me here is Mr. Chris Reardon. Chris is Director of Development for FourStar. Welcome to the podcast, Chris.
Thank you, Brian. Glad to be here. Glad to talk a little bit about the markets and what's going on out there.
Yes, and Chris leads everything on the development side of FourStar, and he's from Cleveland, so he still likes his Indians. Can I call him that? I don't know. Guardians. They may come back as the Indians, and he's got a young family, and we're so proud to have him. The new Reardon clan is on board. Chris, again, welcome.
Thanks, Brian.
And I'm Brian Castle. I'm the CEO and founder of FourStar Wealth, financial advisor to CEOs and insiders, a trustee of the National Boy Scout Foundation, and I'm chief dad to Quinn and Evan, and husband to the amazing Tripty. So that's my story. And if you like our show, please go on and hit a 5 out of 5 and give us a great ranking. We'd appreciate that, everybody. And so we're going to get on with our show now. We are going to do our basic discussion on the economy and the markets and give everybody an update. And then we'll come back with an interview episode again after this. So, Chris, what do the markets look like right now?
Yeah, so flipping to the kind of asset classes, so this is more of a broad overview. We still have domestic equities standing in the number one position, and it's at 269 tally points, and that's plus 5 tally points from the last podcast, which is kind of, I think, beginning of August, to give some perspective there. So we continue to see some strengthening within the domestic equities. International equities is still holding that number 2 position. It's at 253 tally points, and that's plus 3 from the last podcast. So top 1 and 2 positions continue to strengthen. The number 3rd position is commodities, and that's at 232 tally points, but that was minus 5 from the last podcast. We saw that pull back a little bit there. So we're starting to see domestic equities and international equities pull away a little bit more. If you guys recall, if you've listened to any of our last couple podcasts, it used to be kind of a 3-horse race for that kind of number 1 position, but we're starting to see a bit of a separation there between domestic and international versus commodities. So we'll see if that continues or if we see a reversal there. Going back to the bottom 3, so cash remains in the 4th position at 129, and that's unchanged or equal from the last podcast. Currencies is in the 5th position at 115, unchanged. And last is still fixed income at 95 tally points, and that's unchanged as well. So relatively tepid, especially for, about 3 weeks, I think it's been since our last podcast or so. So relatively tepid movement wise. But I think the biggest trend, as you can tell, is obviously domestic and international continuing to gain strength in that 1 and 2 position.
Mm-hmm. So, Chris, on the 3 lower asset classes, cash is unchanged, currencies are unchanged, and that basically means that the fallout that was going on in the dollar for a while that was helping international, that has kind of stopped, right? At least since the last episode, last couple of weeks, the dollar has been stronger and more stable.
Yeah, I mean, we've definitely seen it be a little bit stronger, a little bit more stable. And, I think that right now you've seen the dollar stabilize, and I think eyes right now are on the Fed, especially with the September coming up right here. There's the potential for the rate cut.
Right.
I think right now people are expecting at least a 25 basis point rate cut, but now there's word of potentially a 50 basis point rate cut. So there is play, I think, there that could cause havoc again within the dollar and the strength there, but we'll just have to kind of wait and see.
And then fixed income is in the last position, and it's been that way for a couple of years now, after being mortally wounded by the 2022 interest rate spikes. And now it looks like we might have that cut in rates. But so you look for fixed income to rally a little bit here when rates go down. The prices will go up, and this is measuring the overall value of the fixed income market, and the value will go up if rates go down.
Yeah, the value of currently held, right? So if rates go down, then any new issued fixed income securities will most likely be priced at lower interest rates. So if you're holding, a bond, a 5-year bond right now that, is paying you 5%, that's a lot more valuable if any of the newly issued bonds are, for 2.5%, right? So
Right.
your bond becomes much more valuable and goes up. So
Absolutely. And then US and international doing well. And this is a sustained rally for international, Chris. It's been all this year that international has been way outperforming, and we'll see the markets here in a second. But it's been an entire year, almost 9 months at least, that international stocks have been outperforming US stocks, which is an interesting trend that hasn't happened in 17 years.
yeah, international, especially Europe, I think has been a bit of a surprise as far as the strength that they've shown there as far as the economy. So, yeah, it's been, I think, a pleasant surprise. It's been one of the underlying, I think, reasons that a lot of the global economies held up better than anticipated. Because even though we're seeing some mixed numbers, some weakening here, kind of things like that,
Mhm.
overall, I think it's doing a lot better than people originally anticipated.
Yes. So, Chris, just looking at the markets in general, S&P is up 10.16. That's up 1.02% since our last show. So that's been a positive. The Russell 2000, which is small caps, are also up slightly since the last show, but they were way underwater and they've rallied big time, 5.994 versus 5.1. So since the last show, it's up, but not as much. The NASDAQ, the technology laden NASDAQ, is up 11.84, but just 30 basis points since the last show. So that hasn't been as strong. The areas of strength are the Dow Jones, the dividend stock index, but it has some tech in there as well, up 7% exactly. And that's up 2.45% since the last show. And then the Russell 1000 value, up 8.71. It's up 3.1%. So the dividend stocks are strong. The small caps are strong, although this period they weren't as strong, but they're recovering. So those are the trends that we see. Chris, how about in the sector area? Like what sectors of the main markets are acting well?
Yeah, and it's interesting because you're kind of seeing that play out a little bit within the subsectors as well, or the sectors. Communication services is the leading, and it's had a big run up since our last podcast. It's now at 19.23% on the year, so a big run up there. It certainly distanced itself from some of the other top performing sectors. So that's interesting to see. But what I think that kind of has that tech component that you were kind of alluding to, Brian. I think it has a
Hmm.
little bit of a skew to it that does help it avoid that what the Nasdaq kind of posted, which helped propel it. The number two though, industrials is up 14.37%. That's the second best performing sector. Financials is just behind that at 12.52%, and utilities is in fourth at 12.38%. So outside of communication services, which is kind of an interesting sector, it's kind of tech, but maybe a little bit more, you could say conservative or utilities approach to that tech in
Right.
some ways. Um, Industrials, financials, utilities, all those kind of that characteristic Dow Jones, Russell 1000 value, kind of that dividend paying stock are usually found within those sectors. So it's really interesting. That seems to be what's kind of working right now overall.
Yeah. Well, utilities were number one,
Yep.
and we commented on previous shows. Usually, you don't see utilities in the number one position out of the 11 sectors in a bull market. That's usually not a bull market sector. But we had utilities running, Chris, because of all the need now for energy, because of AI and all the computing power that needs to be created. So the energy sectors were strong, but now it's starting to fade. So utilities are no longer in the top three, the number four. But it's still interesting that utilities are so strong. That's just a sign of the need for energy.
Yep. Yeah, and I think maybe we do see a continued run there. I mean, I think the biggest thing is if we see rates drop again, if we see new bond, rates coming back below maybe sub 3%, things like that, the dividend stocks are one of the biggest benefactors that benefit from it because uh, those dividend yields, if they're 3 or 4%, start to look a lot more attractive, especially
Yeah.
to maybe retirees, things like that are looking to outpace inflation, maybe.
Yeah. So if industrials and financials are up there, that's a dividend kind of dividend stock market rather than just a tech stock market.
Correct. Yep. So, and then flipping to the bottom, we still have the worst performer being healthcare, but it now is positive on the year. It's up 1.31% year to date. But it still is the worst performing sector. The second worst performer is real estate at 3.83% up on the year. Then followed by consumer discretionary up 4.09%, and then energy up 5.18%. So we've seen a bit of a nice run from energy. I think the last podcast it was either second to last or right there. So that's got a nice little bump upwards, but still kind of in that bottom section there, and still obviously a bit of a distance between 5% return and the 12 to 19% that's in the top performers.
Yes. Well then, Chris, the markets, we're giving you the numbers at the end of the month, but the markets sold off on the last Friday of the month in August to close. They're down for the week and for the month, but the Russell 2000 is still up 7% for the month, right? And that's again, I mentioned the best small cap market in 20 years. Gold and precious metals is up 25% this year. Bitcoin's up almost 100% in the past year. And so there's a lot of different things happening in this market. We're trying to make sense of it all. And meanwhile, the Morgan Stanley analysts, there's two chief strategists. One says there's going to be a rate cut next week or later in the month, and another one says there's not. So they're completely diametrically opposed to each other. That'll show you how confused people are. If one firm's research department is putting out diametrically opposed opinions on interest rates, that's where people's heads are. But Chris, you were talking about pricing with the Fed, and I know you had some comments on that.
Yeah, I think one of the things, just looking at the current state of the market right now, too. I mean, I think eyes are right now. I know we have a big important jobs report number tomorrow, but I think really a lot of this leads up to is what are the likelihood that the Fed's gonna lower rates. I think right now it's like a 90% plus chance of a 25 basis point that's baked in. So pretty much baked in a 25 basis point rate cut. But could it, go to a 50? Would they dare, if you say, not do a rate cut? Because if they didn't, the market would surely have a reaction to that. So you have that really playing out. But the other thing that's really feeding some of this uncertainty is the how independent is the Fed. And I know, Trump and his kind of bombastic behavior and how he likes to act, has tried to put pressure on the Fed to lower rates, and obviously they haven't relented yet. So, it really starts to kind of frame and put this picture into the minds of people. And so, what really that's doing is showing a little bit more of volatility kind of playing out through the market. I think they said if there's more proof or if something happens like that, we could see even gold. People just wanted flight to safety, go to asset classes that are less volatile. And if we have a White House or anyone that's controlling essentially the dollar and the strength of the dollar, that now you have the government, you'll be able to really mold the economy to what you need instead of doing what's actually right for the economy. That might be painful in the short term, right?
Yeah.
So it'll be really interesting to see, but that is certainly throwing a bout of volatility right now. That just the news and kind of the narrative that's been going on around that.
Well, and since the Jackson Hole meeting in August, Powell's comments were taken as he's getting dovish now and he's going to be lowering rates in September. That's the market rallied on that, and then everybody felt good about it. But a little watched comment though he made also in that same presentation is that inflation is still persistently too high, and we're not going to put up with basically an inflation rate above 2%. And Chris, we're going to hear in a second what the inflation rate is now. I know from your numbers, but I know it's above 2. And so, while everyone's expecting a 90% plus expectation for this rate cut in September, if you follow what Powell said about inflation, he's not going to lower. So I don't know.
Yeah.
I think it's really much less of a 90% chance based on where the inflation numbers are, Chris. So why don't we get into that? What do the numbers look like in the economy?
Yeah, so we got two interesting reads from the inflation perspective. So the first one is the PCE, which is the Personal Consumptions Expenditures Index. This is kind of one of I think it's the Fed's favorite, but it's one of the ways to obviously look at inflation, how it's impacting the consumer. So that actually decelerated from 3.49% in June to 2.40% in July. So that's overall very positive and actually closer to that 2% target number. So, on the head of it, that seems very positive. But then the other number that is the PPI, that's the Producers Price Index, that came in slightly higher at 3.3% in July. So that increased slightly. And then the CPI read, which is just another way, the PCE and CPI are just two different ways of calculating but trying to formulate the same thing. It came in at 2.7%, so slightly higher, but obviously a little bit more moderated than what the PPI, once again, that's the Producer Price Index. And what that really tells us is the PPI is usually seen as a leading indicator. So what are the producers? What are the stores? What are they facing from an inflation standpoint? Typically, you see that get passed on to the consumer. Since the PPI came in at that 3.3%, which is, I believe, a 1% jump from the month prior, whereas the CPI was unchanged from the month higher. What that tells us is that as of right now, these companies are absorbing that cost pressure. But is that going to stay? Are they going to continue to absorb that? Are they eventually going to pass that on? And are we going to see that inflation number jump? And right now, what we're seeing from inflation does look pretty positive. I think the fear is, the tariffs and everything as they've rippled through. We really haven't seen inflation from that yet. I think even the most positive narratives of it would at least expect a little bit of inflation to kind of play out. Even if it's minimal, but we really haven't seen anything. So, are we going to get get this back end? Are we going to get a hit of inflation? It's going to spike that CPI or PCE number again, and we're going to go, be right back at it. And if they lower rates, they're kind of cornering themselves almost, because it's hard to lower rates then raise them again next meeting. And once you kind of start this.
Well, Chris Powell had once said about 2 years ago that he wouldn't lower rates until we got below 2% on inflation, and we weren't below 2% last fall, a year ago when they lowered, right? So now he's saying the same thing in that little quip that we heard during his comments. So we're not going to tolerate inflation above 2%. So if that holds sway, then they're not going to lower rates here in September, and maybe not even in December, until we get inflation down below 2%, instead of the general impression that everyone else got. So we'll see. We'll see what they come up with in a couple weeks here.
Yeah, it'll be really interesting. I mean, I think, it'll be interesting. I don't know if anyone knows, the market thinks they know, but no one really truly does. So, but overall inflation numbers seem relatively good. I think obviously that PPI number, when that came out, I think the market took a bit of a hit, because that, is potentially, showcasing a warning sign of coming months, or that PCE and CPI could be higher. So we'll have to keep an eye on that. Going on though, the US Q2 GDP number came in. So this is the second reading. The first reading was 3%. The second reading now was 3.3%. So it was actually revised upwards. 0.3%. So that's positive. Obviously, that's great to see. It means the US economy actually grew a bit stronger than they originally estimated. Then the S&P Global Flash US Composite PMI. So this is Purchasing Managers Index. So this is a composite of all the industrial growth, if you will, and servicing sectors, all those sectors, how strong they were. That rose to 50.4 in August from 50.1 in July. So overall, I mean, that's a slow bump, but still strong. We're not seeing that decelerate, which is good to see. Flipping over to the housing market, existing home sales rose 2% in July. And that was a surprise. The estimates were for a 0.5% decrease. So it actually was a 2% increase. So that was a 2.5% surprise on that side. So that was really, really good to see overall. And maybe that's a sign that we're starting to see the housing market loosen up a little bit, because that's obviously struggled. The housing prices right now still remain. And the housing price, I think, did come down slightly, but it went from like 423,000, call it on an average home, to 422,000 average price of a home now. So still at an astronomical price right now.
Yes.
And then flipping over to the labor markets, we're starting to see a slight decrease in the labor market with the last two readings. So the ADP national employment report came in and increased by 54,000 jobs in August. And that's kind of private payrolls, the private jobs market. That was well below the 106,000 jobs number that was posted in July. So about a half the numbers were created in August as were created in July, or at least hiring employment wise. So that'll be interesting to see if that, how that plays out. Are we going to start to see the labor market continue to roll over or slow down? And then the second reading we got was the initial unemployment claims. They rose by 8,000 in August to a seasonally adjusted 237,000. And that was above expectations, which were 230,000. So higher unemployment claims, less kind of employment hiring from the private side. Overall shows a bit of a slowdown right now. We'll see if these trends continue and we continue to see maybe the job market roll over. That would be obviously concerning for the overall economy if we do see that happen.
Right.
So,
well, good. Let's what's going on internationally, Chris?
Yep. So flipping over to the international markets, couple of readings, interesting readings, I think, out of China. So the China services PMI, so this is just the services sector, expanded now at the fastest pace in over a year. So the ratings dog, which is just a kind of a private rating agency, their PMI index rose to 53 in August from 52.6 in July. That 53 reading was the strongest reading since May 2024. So anything above 50 is expansion. So overall, that's positive from China. The same kind of agency, the rating dog agency, their general manufacturing PMI. So that was the services. This is manufacturing. That index rose to 50.5 in August from 49.5 in July. So really interesting. What that shows is in July, it was in contraction. Now it's in expansion territory there, albeit once again, slight. You're 0.5 on one side or the other, still relatively flat from that front. So that was interesting. That was their manufacturing PMI.
Yeah.
What I thought was more interesting was China's official numbers. So this is kind of the Chinese government's official record. Their official manufacturing PMI, what they noted was only a slight increase to 49.4 in August, and that was up from 49.3 in July. So their rating actually came in less than the private services number that was from that rating dogs agency. So who knows? I mean, they're very close, and I think both of them are within probably the framework of error right there, where they're off by such a small amount. But interesting to note that usually you would expect the flip there, that the Chinese government would.
Yeah, the government's always going to have a bigger number, right?
You would. That's exactly what you would think. So,
right.
I don't know if that's more positive if the private sector is they're quoting better numbers than what China's quoting. That maybe that's overall strong. Who knows? But we'll see. And then staying in the Asia markets, South Korea's exports slowed to 1.3% in August, and that's down from a 5.8% number in July. So huge pullback in exports. So now we've talked about this before. We're starting to see tariffs roll through. That July number of 5.8% was probably some front running of tariffs, things like that. But obviously now that 1.3, we're starting to see that the tariffs kind of gum up the works a little bit there. And also I think it probably won't always be that 1.3. It'll probably maybe steady around 2 to 3%. Once things kind of ebb out and, steady out, from that front running to kind of the backlog there.
Yeah. Hey, Chris, if I could interject, this week there was a China summit where President Xi hosted Putin of Russia, leader of North Korea, and also Prime Minister Modi in India. And it was all basically to challenge the U.S. because the U.S. is doing all the tariffs and everything and trying to lead the world through economic power. And so it was a direct shot at America. And of course, that's what China's been trying to do forever. We all know they're not really our friend; they're our adversary. Despite President Trump saying that she and he are friends, they want to topple America and become the leader. But their economy is about half of the size of our economy, but yet their population is 3 times larger than the U.S. So they've never been able to really turn an economy into really a marching, galloping, capitalistic powerhouse, which is what the America has done. It's just their nature of government. So I think it's unlikely China topples America. But hearing all these economic numbers, they don't sound like they're doing too well, for sure.
No, no, and I think one thing to point out too, it was either in the world or I think it was that during that week was also the largest military parade in the world.
Right.
So once again, to showcase the strength of the Chinese
The
army,
power, the power,
the
but
power and
but
everything.
economic power is stronger than military power over time. And so they're really not still not there. But anyway, I digress. Go ahead, Chris.
No, yeah. So yeah, I mean, I think, what we're seeing, yeah, is China still kind of slack a little bit as far as trying to propel their economy forward. We'll see if that continues. Some of the trends there, which we've covered in the past, I think are still concerning. Youth unemployment, things like that. And then obviously they have a population issue as well, from their one child policy days. Where I think they're really going to run into a lot of issues moving forward. But we'll see. Moving
Yeah.
on to commodities, and you kind of touched a little bit on this, Brian, but gold hit a new record high of 3,532 per ounce. So gold continues to push forward. A lot of that is now due to just global uncertainty. It just continues to be a safe haven there, as you see a lot of individuals, investors, things like that, pile into that safe haven asset class. And then oil prices took a bit of a dip recently. And this is really within the last week. Most of this came as surprise information of an increase in U.S. crude inventories. So that's overall good. We're continuing to increase our crude inventories. But that coupled with the anticipation of an output increase by OPEC started to weigh on the oil market. So we're starting to see oil back off a little bit again. Overall, better for the U.S. for the wallet for the consumer, but oil prices as a whole have dipped back down probably 3 or 4% as of late.
Okay. All right. Well, that's a good review of the economy and the international economy. So we'll see where things are. Uh, we're obviously, and just to wrap that up, we're obviously experiencing a bit of a slowdown. One quarter was negative, and then another quarter was positive. We'll see if the next quarter is negative. So it takes 2 quarters in a row to officially have a recession. We had that in 2022, early in 2022. But it wasn't a severe recession. And then now we might not even have another down quarter. We'll see.
Yep. Yeah. I mean, I think it'll be interesting. I mean, definitely there's so much looming uncertainty out there. I don't think anyone really knows. I think we just have to kind of take it as it is and wait and see.
Yeah. So, all right. So, and what we see out there, and there's some items here I wanted to cover. Basically, let's talk a little bit about Doge. So, everybody knows the Department of Government Efficiency, which was led by Elon Musk and founded by Elon Musk along with President Trump. And then everybody knows about the Trump, and he had a big fight, and they were slamming each other in Twitter and all that kind of stuff. The Doge group is still there. Elon Musk is no longer in Washington, but he still communicates with all the people he recruited. But all those guys are still there, and Doge is still looking to cut spending. They've done some amazing things. They found 12 people in the Social Security list that were older than 120. So they took those people out of the Social Security rolls. They also stopped checks for 275,000 illegal immigrants. Illegal immigrants are not supposed to be getting government benefits because they're illegal and they're not citizens. So they stopped that. They also stopped the funding. The National Public Radio was considered to be very biased on one side, and in this case on the wrong side of this administration. So they cut it out, and they said they don't want to be funding any political organizations either side, Democrats or Republicans. And then moving on, the tariffs are still in place, although there's some issues and challenges there. But the one that I thought was the most interesting, Chris, is the 27% tariff on cars to the European Union. We've always bought lots of cars from Europe, but they haven't really bought many cars from America at all, except when General Motors acquired Saab Scania up in Scandinavia. So they were importing some General Motors cars there because they were part of the same corporation. But anything that comes out of the European Union, automobile wise, is tariffed at 27%. They're still negotiating, but they haven't settled their issues yet. So it's going to really change the auto market. And we're probably not going to buy as many cars from Europe unless they come to some kind of an agreement. So that's how tariff policy can really change the economy. Um, and the tariffs have been responsible, according to President Trump, for over 15 trillion of new investments announced in America. So if you want to manufacture cars or anything else in America, tariff would be in fact zero because you're inside America. So that's why so many organizations have agreed to move some of their production and stuff back to America. And so, unfortunately, in the short run, though, after being upheld by a regular court, the appeals court ruled that the tariffs are illegal. Now, they managed to get a stay up until October 14th, appealing to the Supreme Court. President Trump is convinced that they're going to win, and Secretary Scott Bessent are convinced they're going to win at Supreme Court level. Some of the conservatives who are fundamentalists about the Constitution think that it should come from Congress so that Trump will get overturned also at the Supreme Court. So we'll see what happens. It'll create a lot of disruption, Chris, if they get rid of the tariffs now, because we've spent, 5 or 6 months digging all this stuff in. All those investments might be in doubt and everything. That would probably hurt the economy quite a bit.
Yeah, I mean, I think as we've talked about in the past, I mean, I think just throws uncertainty out there again.
Yeah.
Because even if they does get challenged, it gets thrown out, they're going to contest it again. It just throws us into this. As far as, politics aside, any of that, as far as, what the economy would really like or what the markets would really like, it's just certainty one way or the other. We've seen, I think, the economy really since August overall move up steadily, which is, good, just because now they know what the tariffs are going to be. They can kind of see the impact. We're really starting to kind of digest it. Just throw that back into limbo, I think, would mostly just cause it probably a bout of volatility to the markets.
Yeah. Okay, well, we'll see what happens. That will be announced relatively soon, I believe, certainly this month in September before the October stay. So, and for the wait for it category, I've been waiting for this for years. Social Security is basically insolvent and will be insolvent, I believe, in 2032, so not long from now. And so there's all kinds of articles to do. What will we do if Social Security is gone? Well, the reality is Social Security is so ingrained into our country that I think if they actually got rid of it for certain people, there'd be outrage in the land. So I think politically, it's almost impossible to end Social Security. But who could pay more to support it and help Social Security coffers fill up their coffers a little bit more? That would be the wealthy. So what they're now talking about is means testing, which everyone knew would eventually happen, but no one was talking about it for at least a decade. Well, now they're talking about it again, and they really need a rewriting of all the benefits, all the way across the board. They've offered so many benefits to everybody, and disabled benefits and benefits for survivors and disability and all kinds of different things. So they probably are offering too much in benefits because even if they tax the wealthy, they're not going to be able to get enough revenue to make it purely solvent. So the government's going to be running deficits to pay Social Security. But I was waiting for it, Chris, and sure enough, they're talking about means testing now. So there we are. So that'll mean the wealthy won't get their full 48 or $50,000. They'll get less because they already have enough money and they don't need it, right?
Yeah, no, I mean, definitely something that needs to be it needs to be adjusted, right? I mean, I think it's the worst kept secret that if we keep on the same pace where we're at now, it's just, I mean, yeah, it's ingrained in America, but if there's no money in there to pay everything out, then there's nothing you can really do. So they have to make adjustments sooner or later, or else, there's
Yeah.
just nothing you can do if there's no money there.
And the last major compromise and major readjustment on this was done in the 1980s with Speaker Tip O'Neill, Democrat, and Ronald Reagan, the Republican president. And they cut a deal to raise taxes, and that's how they did it. Okay, Social Security taxes. So hopefully they don't raise taxes again, but they probably will means test the wealthy. So that's what we're hearing now. And anyway, that's all we have there, Chris. What about what we see out there?
Yep. Yeah. I mean, I have two quick things more on the fun side, I guess. But biggest news, probably biggest engagement news out there. Star football player Travis Kelce and pop singer Taylor Swift finally got engaged. So it's like, I know the biggest news I think out there right now as far as kind of the pop culture front. So huge news. On top of that, the Kansas City Chiefs, which is the team that Travis Kelce plays for, are set to play the first NFL regular season game in Sao Paulo, Brazil, against the Chargers. And this is actually happening tomorrow, September 5th. The first NFL season game is actually tonight on the Eagles versus Cowboys. That'll kick off the NFL season. So really interesting to see. And it's, I know the NFL's played a lot of games in Europe the last, couple of years, if not more. Now they're interesting. They're starting to spread a little bit more to South America too. So it'll be interesting to see how that kind of plays out, and if there's any expansion teams, international expansion teams out there.
Yes. Great stuff, Chris. We're all concerned about Taylor Swift, of course. Um, I got a couple of things here, Chris. So very quietly, folks, I don't know if you had heard this, but Congress passed, Senate passed, and then the president signed the Genius Act. And the Genius Act is a decentralized stablecoin relationship that allows private finance companies and banks to issue coins that are basically currencies, but they're tied to the US dollar, but they allow settlements to happen very, very quickly. They move commerce along quickly. And so these kind of stable coins or crypto type coins have been issued in other countries, but in other countries, the government controls it. And America's freedom and liberty, and we didn't want to control and have people controlled by their government. So they offer the ability for banks and private finance companies to issue coins as well. And that way we maintain our freedom and the government doesn't control us because we understand that some of the currencies and like even in China, they're already restricting what people can do with those things. So if they don't like your face, they can tell you you can't do this. If they don't want you to buy a gun or they don't want you to buy fatty foods, or if they don't want you to leave Beijing, they can turn off your coins. So we will not have a system like that where government controls it. Government is regulating it and making sure that they all are tied to the dollar, but we'll have coins that are usable and maintain our liberty, which is great news, Chris. So the Genius Act is something everybody should know about.
Yeah, I mean, certainly takes, I think, the currency, the US currency, I think, to the next level. I mean, I think whether you like cryptocurrency or Bitcoin, I think what people have really proved behind that is the blockchain technology that underlies a lot of these cryptocurrencies that make them possible is going to be here to stay. I mean, I think, as you said, the amount of clutter it cuts out, the quick, you don't need to have a counterparty as far as confirming receipts, things like that. It's going to make things light years easier.
Yeah, absolutely. Okay, other ideas here. Chris, college costs are still rising. Now, we've seen college enrollments go down. One of my alma maters, Northern Illinois, used to have 27,000 students out. Now there's 17,000 students out there in DeKalb, Illinois. A lot of colleges are like that now. Some colleges have closed, and some are just experiencing lesser and lesser enrollment as people figure out that maybe, you know, running up 200,000 in debt for a degree where you could never make that kind of money probably doesn't make any sense anymore. So that's what's happening. We've seen some recent articles in some of the Chicago papers and some of the international papers about college costs, and they're going up. Amazingly, you would think they would go down. So they really do got to get a handle on that. It'll cost you $100,000 a year at some top universities now. And so they really have to get a handle on that. But the public is voting with their feet and not going to as much college. Eventually, that'll probably cause mergers of colleges and things like that, unless they can get a handle on all the costs.
Yeah, I
So,
mean, you're certainly seeing the trade schools, things like that, kind of be the beneficiaries of it, as you're seeing a lot of people say, hey, I'm not going to go. I'll rather go into a trade. You can make a lot of money, going into certain
yeah,
trades and learning that skill instead of going to school.
yeah, engineering is another example of a career where, for years, we had tons of engineers, and then people weren't going into that career, and they're some of the most compensated folks coming out of undergraduate just to get an engineering degree, which is interesting. So things are changing there. Um, on the back to the beach or back involved kind of department, Boston beer founder Jim Koch has returned to the company as CEO. This sounds like Steve Jobs after he left and then came back to Apple, or Howard Schultz, who left and came back to Starbucks. So sometimes the founder of an iconic brand turns it over and it doesn't go as well. So they often come back. And this time the Boston Beer founder is back, which is interesting. Um, Chris, turning to crime, President Trump's doing a huge crackdown on crime in Washington, D.C. It seems to be working. It was even initially resisted by the mayor, but now she's embracing it and realizes how good it is to not have crime. They haven't had any shootings, I think, in a couple of weeks now, and no deaths, but that is happening on a weekly occurrence in D.C. Now, of course, President Trump is talking about going into other areas. I know that the sanctuary city policies are keeping like Boston and Chicago and other major cities from cooperating with the federal government. So there's a tug of war. And I mention all this because it does help commerce when the cities are safe, but yet a lot of cities are not safe. We our headquarters city is in Chicago, and President Trump's been talking for weeks now about coming to Chicago, and there were nine deaths last week on Labor Day weekend and 52 shootings. So it's not a good thing. So when people don't feel safe, they don't spend money. It really interrupts commerce. It interrupts lives. And unfortunately, also for the people who pass away, which is very sad. So a lot of those things might be changing. And I know President Trump is urging cities to change some of those policies, and he's using economic power to do it. So we'll see if he's able to do that. Um, and about international crime, President Trump and the administration, they seized 40 tons of cocaine linked to the Venezuelan dictator Maduro, 7 tons of it linked to him personally, like in his own personal ownership. So they've also taken out a drug ship off the coast of Caracas and took out a number of gang leaders that were involved in that as well. So they're getting very aggressive about trying to solve the crime issues in America, Chris. So I think it's a good thing. When we solve crime issues in cities, then people are going to go out to dinner and people are going to be involved. They're not going to be scared. So commerce will pick up and it'll only help the economy if we solve the crime issue. People shouldn't worry about going out and getting shot on their street, for sure.
Yeah.
So anything else on what we see out there, Chris?
No, I'm sure that Phil Knight checks are going to go to pay a lot of NIL money
Yeah, that's right.
Oregon. So hopefully it'll let them win a national title.
Maybe they'll win a national title with that. You got it. Exactly. Like Michigan did a couple years ago. Last one comment about the economy, multifamily real estate. We're about 6 million short on units, but now it's closer to 7 million units of living that we don't have, and so we really do need a lot of building in America, and that is evidenced by home prices. So when they finally get about building again, that should bring hopefully some easing to home prices, and that's it. So that's kind of our full story for today, Chris. As far as the markets, what are we doing about all the things we said? The FourStar models are now fully invested. We're getting close, however, to a position number one on our S&P comparable portfolios as we're seeing a little bit of deterioration in some of the sectors. And by next week, we might be actually at position one. But for now, today, we're still fully invested until we see enough evidence to get a little bit more protected. So that's what we're doing. But we will, if we have to, raise cash and protect those portfolios, Chris, won't we?
No, exactly. I mean, I think right now we're seeing, I think, potentially a little bit thinning out of the market. We've seen that certainly with the tech stocks propping the market up, things like that. So, some of our indicators testing the underlying strength of the market have kind of flipped. So, we'll see. We'll see if that continues. If we continue to see that weakening there, we'll take defensive measures.
Exactly. Well, good. And just as we close, please consult the FourStar Wealth site and sign up for the Today's Market Explained podcast. And like I said, if you do, please give us a 5 out of 5 ranking. There's 2 other interviews that are up there. We interviewed Katie Hubbard of Walton, And Walton is an organization that compiles land and gets it to developers so they can develop new housing units. And they do all that land investing for the developers that focus on just the construction of the homes. So Katie has some interesting things to say about the land market and the housing market. And there's also a recent interview with Jason DeBono, and he's one of the leaders of Inspire, which is a custodian for alternative investments. We talk a lot about alternative investments and how to invest in the diversified alternative funds here at FourStar. And Jason DeBono will tell us a little bit more about what investors can do if they want to invest like in their IRA or their pension account, and they need a custodian to hold those assets. And so watch that interview as well. That's a podcast interview out there. You can go on in any of the podcasts, podcast series and see that those interviews also, or you can go on the FourStar website and link down to today's Market Explained, and you can see those there as well. So, Chris, I think that's it. I think that's all we have for today.
Yeah, covers it as we enter September coming up.
Here we are. Here we are. Welcome to the fall. The Labor Day was a great time. I hope everybody had a great time. And now we're into the fall. And September, folks, is usually the worst month of the year for the stock market. Now, just because I said it, it'll probably be a good month. But watch for it, and we'll see. Hopefully, we don't have a bad September, and we'll be back in a couple of weeks with an update again. All right, everybody, we'll leave it there. Thanks. Bye-bye. FourStar, today's Market Explained for today. Over and out.